Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Wednesday, the 11th of January, and it's a few minutes past 11 in the morning. Let's see how the Forex market is performing through the index grid of our best and worst dashboard. We have the Australian dollar in first position, gaining 3.27% on its currency basket, followed by the New Zealand dollar gaining 1.03%. The US dollar is just below parity as the euro. The losses amount to respectively 0.07% for the US dollar and 0.14% for the euro. The British pound is down by 0.64%. The Canadian dollar is losing 0.99%. The Swiss franc is down by 1.14%, and the yen, which is losing 1.48%. The power strength gives us the Australian dollar 100% long and the yen 100% short. We have high percentages on the Swiss franc and the New Zealand dollar also, respectively 85% short and 85% long. Now let's go to the charts to analyze the majors. Aussie US dollar is moving in a bullish tendency above the previous daily high. The market is right now correcting as we have a bearish price action at a scalping and intraday level. We're above all the moving averages of the EMA dashboard. We have a percentage confluence up to the yearly level, a weekly statistical forecast in favor of a bullish continuation of the move, an RSI above 50 on every time frame except M1, and we have 100% long Australian dollar, so we may have a continuation of the bullish move. The euro dollar is moving sideways inside the no trade zone of the target geometry with a slight bearish tendency. We have a bearish price action at a scalping, intraday, and multi-day level. We have a percentage confluence up to the yearly level and an RSI below 50 on the intraday time frames up to the H4. With a 57% long euro against a 71% long US dollar, it's likely that we're not going to see an extended daily range, although should the market close below 119.33, we may have a continuation on the downside. The cable is moving in a bearish tendency just below the target geometry's entry level at 134.94. The pair is losing 0.11% so far. We have an RSI below 50 up to the H4 time frame, and on the monthly we have a monthly statistical forecast in favor of a bearish continuation. So with a 71% short British pound against a 71% long US dollar, we may have a continuation to the downside should the market remain below 134.94. Kiwi US dollar is moving in a bullish tendency just above the entry level of the target geometry at 0.7209. We're above all the moving averages of the EMA dashboard. We have a confluent price action and a breakout of the previous highs on M5, M15, M30, and on the weekly and the monthly. We have a percentage confluence up to the yearly level and a weekly statistical forecast in favor of a bullish continuation. With an RSI above 50 on every time frame, a confluent delta single volume, and an 85% long New Zealand dollar, we may have a continuation to the upside. US dollar Canada just corrected downward after an intraday high marked below the previous daily high. Price action is turning again bullish. The pair is gaining 0.07%, and we have a monthly and weekly statistical forecasts in favor of a bullish view on the instrument. We have a 57% short Canadian dollar against a 57% US dollar. So should the market go back above the entry level of the bullish zone of the target geometry at 125.67, we may have a continuation to the upside. We should change our view below the daily opening, entry level to the downside at 125.21. We have a similar situation on US dollar Swiss franc. The market corrected down after the daily high marked above target number 2 of the target geometry at 0.9814. Should the market go back above 0.9792, we may have a resuming of the bullish tendency for the day. We have a bullish price action except on the H1 and H4 timeframes, a percentage confluence up to the yearly level, and a monthly and weekly statistical forecasts in favor of a bullish continuation. Let's close the analysis with dollar yen, which is moving in a bullish tendency just below the target geometry entry level after the market corrected down from the daily high marked at 111.87. Should the market go back above 111.64 with a 50% long US dollar against 100% short yen, we may have a bullish continuation of the move. That's all for today's analysis. Thanks for your attention. Good day and good trading from Live Trading Room Trading Community.